What's up, guys? Connor King here with Resolute Capital, and this is going to be our third Q&A video where I just answer some casual questions, and whatever I say is just my opinion, so feel free to do your own research, but hopefully my insight will be helpful to you and that you might learn something. And also, this video is just for entertainment purposes only, and you should always consult a professional financial advisor before making any decisions with your money.
All right, first question, what are some smart ways for young people to invest that have limited income?
Great question. So initially thinking about this, I sort of see two scenarios. One is the smarter scenario where that said person should really just invest probably all 100% of their portions that they have set aside to invest in an S&P 500 index fund. And at whatever age they're doing this at, it's basically guaranteed to be pretty steady 9 or 10% return each year. And so, if they hold this until they retire, whatever amount they would have invested, even if it's small now, then it's high chance that it'll be worth a lot later in their life. But the other scenario I could see is they could take some of it and invest it into slightly more risky stocks. Probably what would be most common would just be to invest it into different tech stocks that would be at a good price right now. So definitely if they're just soaring super high, you might want to wait or pick another one. But a more risky, more reward investment would be investing it into a big tech company single stock. And if you hold that for 10 plus years, your returns would probably be better, but also that is a lot more risky. So if you don't want to be that risky with your money, you would probably want to do the first option of just investing it into an index fund.
Following up with the index fund, why would you suggest S&P 500 over another index?
Great follow-up. Well, the S&P 500 is just an index that tracks the top 500 top performing companies on the stock market. And so these are the top 500 biggest out of all the companies in the US that are public. And so definitely investing into these gives you incredible diversity because you have a little bit of money invested into 500 different companies. And there's a huge track record that spans going back very far. I don't know the exact date, but the S&P 500 has great historical returns to show you that it's just a sound investment. So that is why I would do the S&P 500.
And as far as the other option you provided, say I had a limited income, say like around $2,000 or so. If I was going to pursue individual stocks, would you suggest putting 100% into something like Tesla, which is pretty high right now, or going into trying to manually diversify my portfolio?
Yeah, I would probably try and, if I just had $2,000, I would probably try and use a brokerage that offers fractional shares. And since most tech company stocks are at least several $100s and some 1,000 plus or several thousand, I would probably try to put 500 into 4 different companies that are tech related. So I would just try to get a brokerage that offers fractional shares, and then you might not have the whole stock, but you would have a good portion in each of them, and then that would allow you to be a little more diversified into single stocks. Whereas if you were just in one single stock, that's pretty risky. Well, guys, I hope that these questions and answers were very helpful to you and that you've learned something from them. And I thoroughly enjoyed it, and I look forward to seeing you in the next one. If you enjoyed this video, please like it and subscribe to our channel, and leave any comments you have down below, and especially leave comments of questions that we can answer in our next videos. See you next time.